Good afternoon and welcome to our Twitch TV live stream. My name is Glenn Tompkins. My pleasure to be here. Thank you all for being here. I'm a senior instructor here at VectorVest, 15 years, and these live streams are a beautiful thing to reach out to our subscribers and to new people who haven't heard about the VectorVest as a means to learn more about the software, the flexibility, and the power that this software will put into your hands to help you to consistently make money in the market. The company I work for, as I mentioned, is VectorVest. They've been around for 30 years, 30 plus years, and they are a stock analysis and portfolio management system. We analyze stocks better than anybody out there. I challenge you to put us up against anybody to analyze any stock that we track, and we track over 8,400 stocks, 8,300 stocks any given time for value, safety, and timing. And we are the only ones that are out there that analyze stocks for both fundamental and technical analysis to help you to make the right decisions at the right time. Today is Thursday. Today is what we call Trending Thursday. Trending Thursday, and what's trending in the market. And it keeps on top of a lot of what's going on economically from the standpoint of the market as well as the market itself. The economy and the market happen to be two different things. Keep that in mind. They are two different things, but a lot of what the Fed is doing to spur the economy spreads over or spills over to the market as well. So let me just start off with a quick story. Everybody knows how bad the market was yesterday, right? So I'm going to bring up a YouTube video. I'm not going to play it, but this is from CNN. All right. The market was down 801 points at the close of business yesterday, and a CNN reporter on Wall Street. It was a bloodbath. And a lot of people are talking about the inverted yield curve and that a recession, these are bringing up recessionary flags. All right, so real quick, what is the yield curve? In essence, it costs more for a borrower to borrow over a short amount of time than it does for a longer amount of time. Normally, over time, when you borrow money, it should cost you more money to borrow over a longer amount of time because you spread the payments out. But when the 2-year yield is more expensive to pay back the money, that is unnatural. That is unnatural, and that is the inversion of the yield. And a lot of people feel that it's all about a recessionary flag. Someone brought to my attention there's 12 points of interest when it comes down to a recession. The inversion curve is just one of 12, and that's one thing. Number two, even as this inversion curve happens, it still takes a while before the recession hits, if it does. So all I'm saying is from the standpoint of what people are saying in the street, what the people on TV are talking about, I'm going to move this over from the doom and gloom because people are running around like with their heads cut off like a chicken, wondering what to do. Oh my God, the market is going to hell in a handbasket. What to do? First off, we'll get panic selling. Then when the market reverses and goes back up for whatever, a day or two, we're going to get panic buying. And back and forth. This is a time where you're going to stand a bigger chance on losing money in the market instead of taking a deep breath, stepping back, and having a tool that's going to keep you on the right side of the market. So that tool we use is the VectorVest software. And in the VectorVest software, we have something called the VVC, or VectorVest Composite. The VectorVest Composite is an indexed arithmetic average of all of the stocks that we track, and currently we track over 8,300 stocks. What you're looking at on this graph is the movement of that VectorVest Composite, which tracks the move of over 8,300 stocks. We use it to time the market because of the sheer number of stocks it tracks. It will give us a better representation of broad market movement. I'm going to put us in on a 3-month period, and you can see really quickly where we stand right now. Here's the high of the market by way of that composite, which was hit on 7/24 of 2019. As the market fell, we're still in a downtrend from the high, and the VectorVest software has already put you in that mode, keeping you on the right side of the trend of the market. Now, from a market timing perspective, we don't guess or we don't predict where the market is going to go. We follow the trend of the market. So I want you to keep your eyes on something here. Here is that 7/24 date, which is over the last 3 months, the high on that VectorVest composite. I am going to use our slowest, most conservative market timing call, known as the confirm calls. This is ideally suited for those longer-term investors who don't want to trade in and out of the market a ton of times throughout the year. Now, keep in mind, we're also looking at a 3-month graph. I'm going to put on that call, and it will generate a green arrow for a confirmed up call, and it will give a red arrow on the confirmed down call. Because it's so slow, it will take time to trigger a call, but once it triggers, it is a longer term call. Right now, the last call that we had on that signal was on 8/9 of 2019, prior to yesterday's activity. So, keeping in mind, even though the day was bigly down, I said bigly, was bigly down yesterday, VectorVest, as the slowest, most conservative signal we have for timing, already from a trend perspective, had you playing the market to the downside prior to that big down day and the ensuing continuation of the down today. Keeping all of that in mind. All right, let's speed this signal up for the people who are more so swing traders. Let's move from a confirmed call and let's change it to what we call the DEW, or it is our technical timing signal. It's a little faster than the confirmed call, got you out closer to the market top by way of the VectorVest composite. And look at that. Look at that. That happened on 8/1 of 2019. All right, and look at that. So that was a down day, followed by a gap down and a down day, followed by a bigger gap down and a bigger down day. How crucial was that call? And this is, folks, keeping in mind, prior to these red flags going up because of the inversion curve. This is where having a strong, powerful, flexible tool at your fingertips comes into play. This is the power behind the VectorVest software. So even though the doom and gloom is coming to the forefront now, how about you have a timing signal that gets you out quicker than the people on TV will get you out. And those people on TV get paid a lot of money to give you financial advice. Well, we're not giving you advice, we're giving you guidance. And the kind of guidance that's going to help you, one, make money, and number two, hold on to the money you've made. And that is the power of market timing. So if there's anybody out there who honestly feels that market timing is not doable, I'm here to tell you that we have 7 different market timing calls following the trend of the market to help any type of investor out there make better decisions to know when to buy or when to sell. Because it all comes down to a trading plan. Your trading plan should consist of knowing when to buy, what to buy, and when to sell. But wait, if you're brand new to the software, I'm going to mix that up a little bit. Because in order to start to helping you right away, you're going to put your watch list or your portfolio into a VectorVest watch list. First off, you're going to know when to sell, because you need to know what stocks need to get out of your actually what to sell, because you're going to need to know what stocks are hurting your portfolio, and VectorVest is going to start off by helping you know what stocks are definitely hurting your portfolio. Once you have that what to sell, you're going to need to know what to buy to replace the stocks that you've gotten out of. And then you're going to need to know when to buy. So the VectorVest software is going to help you as a brand new subscriber very early in the game to help you to make the right decisions. But that whole idea of what's going on in the market and starting to panic should be taken off the table. as a VectorVest subscriber, you should always have a cool, steady head as to knowing what to do. You shouldn't always be depending on the people who are on TV who are just there for ratings. They're there to make sure that they get as many people to watch the show as possible. Well, you know something? I don't want to be well entertained. I would rather to be well informed, because I'm putting my hard money out to work for me. What I'm looking to do is make money in the market, and a tool like VectorVest is going to help to put me in the driver's seat to have full control over what I do without being sideswiped by listening to someone else and have those two thoughts thumping in my head and still not knowing what to do. All right, so keeping all of that in mind, that's what's going on. And from the standpoint of the doom and gloom, nobody who is a VectorVest subscriber should ever feel the doom and gloom. And how about we're ahead of the curve from when everybody is talking about doom and gloom now, all right? Keeping all of that in mind, that's where we stand as far as the VectorVest software, and it's all about putting things into perspective, all right? Don't panic anything. Don't panic buy, don't panic sell, don't panic anything. And I want to show you something with today's activity. Where did the price of the composite fall down to today? Look at that. We're right at a level of support at $45.81. Look at the wick of today's candle. We went down as low as that level of support. Let me make that a little darker. We went down as far as that level of support. Tom Badger, are you here? Look at that. If Tom or Badger were here, he would say this stuff really works, because it does. We can clearly define levels of support, in this case resistance and support. That's what it takes, and that way you don't get caught up. The whole idea of the doom and gloom, the whole idea of a recession is looming. Just keep in mind that whole inversion curve on the yield is something that's out there. But you know what's even more important? You know what's even more important? Interest rates. Interest rates are still at historic lows. It still is a great time to borrow money and pay it back at a lower interest rate. And right now, if the economy stays the way that it is, we shouldn't have to lower interest rates anymore. But if the market is tanking, and I want people to still understand there is a difference between the market and the economy, but people like to try to put them together. And they say, well, if the market is tanking, then the economy is tanking. That's not the case, but still may put pressure on the Fed to lower interest rates even more to help to spur the economy, and then also hopefully to spur the market. Get that a little lower and James Earl Jones will be after you. BSR closing in at 0.20, MTI closing in at 0.60. Bottom soon. We'll take a look at that. We'll take a look at that. All right, let me get back out to the news. How do I get back there, Joey? Did I do something wrong?
I don't know if we ever put it up.
I had it up there.
Yeah, well, you just go to it.
Oh, that's what I do. Okay, never mind. He's right. I just go to it. Boom. All right, so that was the first trending news that I wanted to talk about today, was the big down day in the market yesterday. And now moving over to the VectorVest software to give you a better perspective on what's really going on in the market. As I showed you, the market is going down today, but it did stop at a level of support. The market still overall is sitting in a channel. Do we have more downside? The answer to your question is yes, we do. We do have more downside, but in order to see it continue, the market has to break through that level of support that I showed you, and then we still have yet another level of support after that. But that was big news yesterday, breaking news when the market closed yesterday on CNN, 801 points down for a move of 3% to the downside. Kirby is saying market is wanting to break down through support. It wants to be below 45.83 so badly, 3 red lights. Joff says the bottom soon, but nobody knows when it will strike, just that it's closer than it has been. All right, let's do this. Let me go back to the market timing graph again. All right, there's that level of support sitting at 45.81. We have another level of support, which is at a 3-month low, sitting at about $44.94. Let me make that a little darker for you. $44.93, $44.94. So do we have some more downside? Yes, and that's to the 3-month low. That is just to the 3-month low. Now, I'm going to stay in the software for a second and take you to the home page. The home page is a great place to get a good feel of what's going on in the market. Remember I told you we track over 8,300 stocks. Currently we track 8,350 stocks. Of those stocks, how many of them have buy recommendations, sell recommendation, and hold recommendations? Definitely more sell recommendations in the system than buys. The market is definitely showing signs of weakness. Here is that indicator, the BSR, which shows the health of the market. As someone just stated, the buy to sell ratio is getting close to a level of 0.20 where the market starts to look for a bottom. All right, that level of support, if we get close to that level of support, how about both of these indicators, the buy to sell ratio at a level of hopefully 0.20, and when the MTI or underlying trend of the market gets to a level of 0.60, the market is going to be looking for a bottom. How about we're close to that, not there yet. And once we get to those levels, it doesn't mean that the market is going to rebound on a dime and go back up. What it does mean is that we do have indicators that let you know to be aware that the market is at a level where it's looking for a bottom. And just like Joff says, we're not going to know when it happens, all right? And it doesn't just happen on its own. It doesn't just happen on the turn of a dime. But at least as a VectorVest subscriber, you have a tool that tells you the market is at a level where it is looking for a bottom. Kirby says, in our user group, which is in Missouri, subscribers seem to look at the color guard also as a selling trigger, not just its intended when to buy trigger. Can you explain? Yes. One of the things that we will always talk about when it comes to the color guard, it tells you if it's okay or not okay to buy. It is not by design to tell you when it's time to sell. That's why you look at the daily, that's why you look at the market timing graph to help you determine whether it's time to sell. These colors denote the red, the yellow, and the green, just like what you would find on a traffic light. What's the main color you see in here right now? 1, 2, 3, 4, 5, 6, 7, 8. There's 9 yellow, which means half of the bars that are in here, there's 18 bars, 6, 12, 18. Half of the bars that you see in the color guard are telling you what? To be cautious. What do you see start to creep into the color guard a lot more over the last 2 days? A lot of red, but still the preponderance of color is still yellow. So if we've got 9 yellow bars, which means we have 8 red bars and 1 green. Something else to tell you. How about all 3 colors are being represented in the last 6 trading days? The market is having a hard time taking hold to a specific trend. If we go back to the market timing graph, watch, the color guard is right on point. Where is the market? The market right now is in a level of being in a channel. The market is having a hard time trending up, put this on a 6-month graph, or trending down. That is a trend up. That is a trend down. This, folks, is a sideways moving market. And guess what? The color guard is saying the same thing with all 3 lights being represented in the color guard. The market is having a hard time solidifying a direction. Again, folks, this is the power of having the software. So Kirby, when it says that the color guard is not designed to tell you when to sell, we can see transitions from being bullish to bearish, but it is the market timing graph that's designed to tell you when it's time to sell. That's what it is by design. The color guard is only there to tell you if it's okay or not okay to buy stocks. Based upon what I see right now, it's not okay to buy stocks. That's more than enough. Not that it's a trigger, to sell, let me use the market timing graph, breaking through a level of support, looking at the buy to sell ratio, looking at the MTI. Let's look at the indicators to help us to know when it's time to sell. How about when RT goes below the value of 1? The market is in a downtrend. That could be a signal. Watching the buy to sell ratio go from above 1 to below 1. That means now the market is showing signs of weakness. That could be a sell signal. How about the MTI going from above the value of 1 to below the value of 1? The underlying trend of the market is now down. That could be a sell signal. How about looking at the primary wave going from up to down? Now the week over week movement of the VectorVest composite is moving down. That could be a sell signal. There's a lot of other signals here to help you for the sell trigger, but the color guard is designed to tell you if it's okay or not okay to buy. And guess what? If I'm looking at the color guard right now, it's not okay to buy. And prior, let me go down one more day to yesterday. Right now, we still had a lot of yellow. That was yesterday's color guard. We still had more yellow than anything. Primary wave was down. We had a confirmed down call. We were bouncing back and forth between that fast signal. All right, more yellow than anything. Probably not okay to buy. Keeping all of that in mind. Hopefully that makes sense. All right, and for all of you new people that are in here that is getting a gander of this information, if you like what you see, do not forget to follow the page. All right? And that just means that you enjoy what you're seeing and you see and you see that there is potential in being able to use it. So a lot of information here going on in regards to Trending Thursday, but I think it's important to have that information at hand so that you have a better feel of what's truly going on in the market, so you don't get caught up in the quagmire of what everybody else is doing or what everybody else wants you to do. I don't care what you do. I just want you to make money. But I do want you to use the VectorVest software to help you to make the right decisions. I cannot make the decisions for you. I can just give you guidance on what to do. Let's see what else is on the docket for Trending Thursday. All right, here's something. Let's talk a little bit about the volatility. The volatility of the market is above the value of 15, which is the VIX, is above the value of 15, letting me know that the market is more volatile at this particular point. What does volatility mean? It means a lot of movement, This is why you'll have a day where the market is up one day, big, and down the next day, big. That is that is the epitome of volatility. All right, so key points. Volatility index has risen about 15% this month. That's a big move in volatility. All right, some people, this is a CNBC hedge fund person, tracks the top ETF performers the week after the VIX popped above the 15. That is the level where you say that the market is more volatile when the VIX gets above the value of 15. Providence, are you here? Good afternoon, Athernity. There we go, Athernity. Good afternoon, how are you? Glad that you're here. All right, so when the VIX gets above the value of 15, the market is considered to be in a volatile market. All right, there's the VIX exchange. Stocks have whipsawed in August on concerns about the trade war between U.S. and China and global economic uncertainty. On Monday, stocks fell on worries and falling yields, followed by a rally of stocks on 300 points Tuesday. Then Trump delayed and canceled tariffs on select items. Just yesterday, the Dow dropped 800 points. So big up day because of news, big down day because of news. This is a very news-driven market. Most times, volatile markets are driven by news. And a lot of the different volatility indexes and what they're doing, the XLU, IYR, TLT, XLF, XLV. Kyle, there we go. I like Kyle better. I do like Kyle better. Mal says, could you talk about how to best use contras in markets like this? Contras as I can't short my account. How about, I got a hamster. Good afternoon. Is volatility a bad thing? Volatility is a good thing if you're a more aggressive trader. Let me explain why. Let me take this same information about volatility and put it into a VectorVest perspective. I'm going to go back into the graph, and I'm going to add a new graph, and I'm going to put on the VIX, which is the volatility on the S&P 500. I'm going to find me a line of, of 15. I'm going to draw a horizontal line with 15, 15, 15, 15, 14, 15.09, 14.97. I'm going to leave it right there. It's about 15.03. All right, let's make this a little darker. When the VIX, or the volatility on the S&P 500, gets above the value of 15, the market is more volatile. Well, everybody knows what happened between October and December of last year going into this year. The market was very volatile and clearly above the line of 15. Now, Green says volatility is great for options. Absolutely, as a seller of options, Green, because premiums are going to be more expensive when volatility is higher. And as higher volatility kicks in, I'd rather be a seller of option premium because I'm going to receive more of a premium. I'd rather not be a buyer of options at that time because the premiums are going to be higher. It's going to be more money out of pocket. So volatility is definitely good for option players, but primarily as a seller of an option. Kyle says, I always look for volatile stocks. I'm very aggressive. Keep in mind that in volatile times, volatile stocks will be really volatile, but you have to understand, playing volatile stocks can be a good thing, but also playing a volatile stock, you're susceptible to a lot of whipsaws or a lot of reversals. And as long as you're comfortable in understanding that, learning that you have to take those losers quick off the table so that they don't hurt you, or you're gonna have to give them a little bit more room because of their volatility. A good indicator to use on a volatile stock is probably going to be average true range, or ATR. Average true range, because even on a volatile stock, it does have a cap on its normal trading range. And if you use a multiplier of 2 on average true range, even on a volatile stock, it gives you room to play that stock. It gives you room. So on that kind of situation, average true range is a good way to manage a volatile stock. But keep in mind, you have to be able to let a stock go against you 10, 15, 20% sometimes. And if you can't do that, you're not nearly as aggressive as you think you are. Jesse says, is there a way to sort out volatile stocks in the trading view, for example? I can find some of the most volatile stocks in the market or in our database by utilizing a search to find those stocks, Jesse. If I can try to make that happen, I will. All right, if I could try to make that happen before this session is over today, I will. Deacon says, I like using Bollinger Bands on the VIX. When the candle is outside the bands, you know a reversal. So we can do that. Let's go add a technical indicator. We'll go down to add parameter. We'll go to technical analysis, and we're going to go put on Bollinger Bands. Now, if you put Bollinger Bands on, you play the pinch. You play the pinch. Here was a pinch prior to the VIX getting above 15. There's the pinch when it gets close. Here's the pinch when it gets close. There's the upper band. Here's the pinch as it got close. There's riding the upper band. But notice that even using Bollinger Bands, the price of whatever you're looking at will always regress to the mean and get back to the center. And we'll get back to center. So how about back in October, playing the VIX? Look at that breakout of the pinch riding the upper band, and holy smokes, did it rock and roll. All right, so I'm with you, Deacon, in playing Bollinger Bands on, even on the VIX, can help you to get ready, set, and go when it rocks and rolls. So I do like that. That's nothing wrong with that. All right, so I'm going to take Bollinger Bands off for a second. And the question that came up was, Jesse, a good way to sort out volatile stocks. Remind me in the last 10 minutes of this presentation, and I'm going to see if I can make that search for you to help you to find some of those volatile stocks. How about that? All right, how about that? So the volatility on the market is definitely above our value of 15. I'm using a 3 and an 8 exponential moving average on volatility. And how about it stayed bullish? Let's put that back here. Look at the 3 and the 8 on the VIX. Even on the pullback when it got less volatile, the 3 and the 8 still kept me. The market is still volatile. The market is still volatile. How about the RT on the VIX? It's definitely in an uptrend. So there you go. These are the things that will help to make a difference in your trading. All right, so the reason why I brought that up is because we're looking at volatility. Utility sectors are a great way to play volatility. Electric, water companies, those are the things that work out really well in a volatile market. All right, bonds, the iShares rose 0.25% when the VIX breached 15. So I'd be a little careful with treasuries right now, but a lot of real estate. One caveat of volatility is the result of a recession centering on real estate. These names could get hit as well. So a good little story on what ETFs to think about playing in more of a volatile market. All right, that's why it made the list to show up on Trending Thursday. How many of you play weed stocks? How about Canopy Growth? The world's largest pot company lost $1 billion in 3 months. That's big news. All right, how many of you are playing marijuana stocks? But that's the biggest pot company that lost money. Stocks fell 10% trading after elimination of 1.8 billion in warrants related to Constellation Brands investment leads to earnings miss. All right, so Canopy Growth, quarterly loss Wednesday and missed analyst estimates for revenue. So it missed earnings and revenue, sending shares down 10%. Sending shares down 10%. And, you know, talk about volatility, weed stocks are exactly that, are definitely volatile stocks. Definitely volatile stocks. How about Canopy Growth fired co-chief executive Bruce Litton not long after its previous earnings report amid reports of unhappiness at Constellation with continuing large losses. The CEO, Mark Zucklin, has remained at the helm of the company but has said he expects to exit once a new leader is found. So the management of the company is under scrutiny now because they can't keep good people there. So the CEO is in search of a new CEO so that he can leave. All right, so analysts surveyed by FactSet had estimated fiscal first quarter adjusted losses of 38 cents per share on a revenue of 111.9 million. Canopy did not provide any per share adjusted earnings information. That's why this stock makes my trending list, because, you know, that's a big miss for a big pot company. It sounds like Tesla. Sounds like Tesla. Sounds like Tesla. All right. So that's what's going on with one of the biggest marijuana companies. Oh, there's Waldo. Hey, Costco found Waldo. Did you see Costco found Waldo? I just showed it right there. Costco found Waldo. All right. Anyway, there's Waldo in the park looking for people. Anyway, let's go. Apple loses ground to Samsung. I am such a big Apple person. Love Apple. I'm not in love with Apple, but I do love Apple. Apple loses ground to Samsung in Europe. Apple's European iPhone market share dropped 17% year over year in quarter two, and that's in Europe. Shipments fell from 7.7 million to 6.4 million. Do you know something? 6.4 million is a lot of phones. That's a lot of phones. Good Gordon Gin, but it fell from last year 7.7 million. The market share slid from 17 to 14%. They still have a 14% stronghold on the market just the same. Samsung was the quarter's regional winner with over 40% share and shipment growth. Wow, that is a big bump up for Samsung. All right, from 15.3 to 18.3, most of the growth came from mid-range phones rather than the premium flagship models. And I think that Apple is trying to put out the lower dollar phones, mid-range phones, and of course, like me, my Apple 10, my i10 or X10 or whatever, I got two of them. All right, I got two of them. Why? Because I'm me. And then I got one iPad, and then I got a second iPad. So I love Apple. I support, you know something, Apple hits or misses earnings on me alone. They pretty much hit or miss earnings just on me alone. And Terry's right. For a lot of people, the phone prices are too high. And I think that is why they still try to have a lower end phone, or better yet, how about the older models? If you go and set up an account with one of the wireless providers, a lot of them are giving away phones. They're giving away the old 6 or the old 7 now. All right, they're just giving them to you. All right, and I think that's to accommodate Terry saying the prices are too high. I hear you. Deacon says, I just bought another Samsung Galaxy. Great phones. I got somebody here. Kirby, you know Scott. Scott is all about the Note. I think that's Samsung, right? He's all about the Note, and he loves his Note, whereas I'm the Apple guy. I'm the Apple guy. Joey's an Apple guy, right, Joey? Yeah. Daniel, though, is on the dark side. Daniel's on the dark side. I think Daniel's got, I don't know. I think he's got a flip phone or something. I think he's got a rotary phone. He's got a mobile rotary phone. That's how far back Daniel is. He's got a mobile rotary phone. There you go. A1 says, what do you think of DE puts? All right, we'll take a look at a couple of stocks. I got you, A1, Jesse. I'm going to take a look at that for you. All right, what else is on my list here? Oh, big thing. All that glitters. Here we go. All that glitters might be just what your portfolio needs right now. Everybody knows that gold is still rocking and rolling. Daniel says, oh, Daniel's got a Pixel? Oh, he doesn't even have the same. He's got the Pixel. What is that? That is Google? You don't even have a real phone. I'm surprised you can even make calls on that. That's not even a real phone.
Did he trade in his Yahoo phone?
Huh?
Did he trade in his Yahoo phone?
He had a Yahoo phone?
Yeah, or AOL phone.
You had an AOL phone and you traded in for a Pixie? You got a Pixie phone? Isn't that like a fake phone, Daniel? Yeah, yes, what he's got. He's got a fake phone. Yes, he says shots fired. He's got an AOL. He moved over from his AOL phone over to the Pixel. That's what he got. All right. So gold is rocking and rolling, has had a strong run this year. 18% in the year to date. Gold is rocking and rolling. Oh, man. Terry says that Daniel's got a Star Trek flip phone. Woo! Gold would stand to benefit from continuing declines in real interest rates and from its role as the currency alternative. That is, gold is what it is. So now let's talk about that. I'm going to go back into the software, and I want to show you something. That's not the one I wanted. I'm going to show you something. I'm going to go to the Viewers tab, and from the Viewers tab, I'm going to show you the industry viewer, okay? The fastest moving industry in our software happens to be, drum roll please, mining, gold, silver. Now this list, this industry viewer list is sorted by our indicator, RT, or relative timing. That is looking at the short-term price trend, in this case, of the industry. So in essence, I'm finding the industries that are moving up the fastest, which in this case is mining, gold, silver. Folks, with the VectorVest subscription, you can see what the best industry or sector is at any given point whenever you want. All right, whenever you want. As a sector, mining is number 10 or so. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Yep, mining is number 10 as a sector, but keep in mind, there's 41 sectors, and when we get to the industry groups, there's 221 industries. More industries than sectors, and out of the bigger number of 221, mining, gold, silver is the number one industry. So let's do this. Let's go view the stocks in the industry group. Let me bring that up. What's the best stock in the industry? Look at that, Kirkland Lake. Deacon says the Canadian user groups are killing it with gold and mining stocks in the August user group channels. And you know something? They sure are. They're rocking and rolling with it. They really, really, really are. Kirkland is the #1 stock by value, safety, and timing in the stocks mining gold, silver. So how about this? For those of you who are a little bit more aggressive, why not sort the list of stocks by RT? So finding the stocks within the industry group that are moving the fastest. Something's on the tip of my tongue. Good gravy. How about AXUs at the top of the list? $2 stock. Who's looking for those more aggressive stocks? How about that's a $2 stock in the hot industry? How cool is that? Go down the list. How about a $3.80 stock in the hottest industry and that's moving up fast? How about a $1.89 stock in the hottest industry that's moving up pretty good? How about a $3.44 stock in the hottest industry? Where's my aggressive people at? This is a great way to find the hottest stocks in the hottest industry and that are lower dollar, that are a little bit more aggressive. Where's my aggressive people at? Type a yes in the room. How informative is this and how helpful is it? How helpful is it to be in the hottest industry and looking at some of the most volatile stocks primarily by way of price? Primarily by way of price. All right? So gold is hot and moving. All right? How about if you're looking at what's going on in the market and you may not be nearly as aggressive? All right? So that story talked about in the Trending Thursday, talked about how well gold is doing. Well, I can take that information, go over to VectorVest, confirm that mining gold, silver is the hottest industry in the database. Drill down and try to do some information, get some information on a lot of the different stocks that are in there. I can look at some of the cheapest ones to jump on board with. I can look at the best ones that buy value, safety, and timing. How about, I'm going to do one other thing. How about if I'm looking in that industry, okay, and maybe I want to find the safest stocks in the industry. So I know the industry is hot, but maybe I want to have a sense of safety even in the hot industry. Kirkland is one of the safest stocks in there. Franco-Nevada is one of the safest stocks in there. Royal Gold, one of the safest stocks in there. Newcrest Mining, one of the safest stocks in there. Those are the 4 best, safest stocks by relative safety in the group. Joff says, talking about ego, there's where they are. And ego, there's EGEO. Let's start it by RT. Let's see if it moves up the list. So the fastest moving ones, AXU. Behind AXU, there's Eldorado Gold. There's KNTF, K92, Dorado Gold, NGAU, some of the best stocks. And, you know, so not only am I looking at the hottest industry, but I can force rank by any of these indicators. Which stock has the best upside potential over the next 1 to 3 years? You didn't know you could do that, did you? Now, some of these stocks may be sell rated. These are value stocks, stocks that over the long term will make money by way of relative value. The indicator that looks at the long-term price appreciation potential as compared to a AAA corporate bond or an alternative investment. So these are hot stocks, but how about finding out which ones have the biggest potential to make money, more money than a AAA corporate bond over the next 1 to 3 years? So force ranking by any of these indicators. How about the stocks that go up more than they go down by way of our CI or comfort index? AU, KL, a lot of the same stocks, no matter how they're sorted, are in the top 10. Those are the stocks to always keep in mind. This is the power of the software. So again, for all of you new people who have never seen this, this is why you want to follow the page. For all of the people who are not subscribers, this is the reason why you want to think about taking the 99-cent trial that we offer to you guys that are on Twitch. So it's not just about talking about what's trending, which is what Trending Thursday is all about, but it's also to show you the power of the software and what can be done. There's a lot of flexibility. So real quick, let me close out of this. question was to find some of the most volatile stocks. I'm going to go to Unisearch. I'm going to create a search real quick. Stock price, actual. Let's go stocks price less than, $5. All right. And I want now stocks price volume split adjusted. I want a delta of greater than, over the last 10 days, sort. Now I'm looking at stocks that are less than $5 who have gone up the most. This is a good way to try to find some volatile stocks. All right, lower dollar stocks that have had a good bump up in price. All right, notice that a lot of these stocks fundamentally may not be good. But look at that relative value, relative safeties. And I want one other thing. Stocks, capital appreciation, RT greater than 1. You want volatile stocks, I'm gonna hook you up. This is for Jesse. Jesse, you still here? Jesse, you still here? I hope you are. All right, I told you I was gonna try to do that. How about look at these stock prices? You want volatility? You want, look at these inexpensive prices. And how about these stocks fundamentally are not sound by way of RV and RS, but the stocks are definitely in an uptrend. If I do a graph of these stocks, you want volatility? There you go. I don't know if Jesse is still here or not. Might not want to put volume. I am. I'll put volume up here as well. Where's volume? I'm going to take off, add parameter, price volume. Let's add volume. Man, I can't believe that Jesse left. I told I would look at it for you. Look at that. How about this is a $2.03 stock. You're looking for lower dollar volatile stocks. There you go. There you go. How about that? How about that? Hey, Tweezer. And some of these may not look so pretty. I don't like that one. Not real good. No. That's probably a buyout right there. CVRS. No. Maybe. That's a possibility. Maybe. No. Maybe. I'm looking at the stock's price. Remember, I'm looking at end of day here on a 3-month graph. I like that Chesapeake Gold right now pulling back, but moving sideways. Look at that equity curve, though. How much is that? It's a $2.99 stock. How many Jessies got going on here? This was a different Jesse. Jay, I know. Daniel's talking about all of the gift subs by John. TXMD, I'd like to see the stock take out that high there. Not feeling that one. That may not be bad. NLTX, look at that run. Look at that run. Like to see if the stock can take out that high. Watch RT is moving up. Watch volume, though. The stock is still going up, but volume is falling. Volume is conviction. Be careful with that. Woo! I'm not feeling that one. FVE pulled back a little bit. RT is pulling back. Be careful with that. Be careful with that. I don't mind that XRF. Look at that run. Look at that run. Look at RT going positive. I'd like more volume, though. Look at that RT go positive. All right. So that's a simple search. Stocks less than $5, 10-day delta, relative timing above 1, sorted by the delta. That may not be a bad way of looking at some aggressive stocks. There's, Jesse Bonsai. Did they leave? I told them I would give it, if I had a chance, I would do it, but there's your search. Maybe they went away. Joey, did you scare them away?
Yep.
Oh, man, Joey.
I put them in timeout.
All right. One last thing. If you are more of a conservative investor, okay, I did put together a list of stocks. Did I not do that in here? What software was I in when I built this?
No, you told me yesterday you didn't know the password.
Oh, there it is. My watch list, and it's Twitch Trending 815.
Twitch trending?
Twitch Trending. Send that 10 times fast. Twitch Trending. I got 10 stocks with relative safeties. 9 out of the 10 stocks have relative safeties above 1. Volatile markets. Asif says, how about RT just crossing above 1? I could do that too. In that Unisearch, I can go, let's do a trend. And watch this, custom. And let's go day 2. less than 1, and today greater than 1. And now I've done that for you, that the stock's price, or the stock's RT was less than 1 yesterday, greater than 1 today. There you go, Asif. There you go, Asif. Still sorted by my delta, but now let's do a graph of them all. Put this on a 3-month graph. And you still have to cherry pick, though. Still have to cherry pick. Turn, be careful with that. I do like this HX coming off a level of support, moving higher with good volume. I do like that. I do like that. I'd like to see the stock take out that level of resistance, but I do like that RT just crossing above 1. You can see that I can go quickly through these graphs to determine which ones I like, which ones I don't like. I can do that pretty quickly. So in that list, as if there was one stock that I liked, and that was it. But I just blew through that real quick. All right, let me go back to the viewers. I created a list of 10 stocks with relative safeties above 1. I want to show you something. In a volatile market, 1, we could play the hot stocks, which is gold. 2, longer term investor. Let me show you what good quality, high quality relative safety stocks look like. These are stocks that I can hold in my retirement portfolio. Look at, during all of this level of volatility, look at what this stock is doing. Still overall going up. I'm gonna keep it on 1-year graphs. Look at MKTX. Look at that. Look at these are like 45, Starbucks, 45-degree angles. So this is another way to play the market, even though the market is volatile and up and down. High quality dividend paying stocks might be the way to go. Edward Life Sciences, Tyson Foods, CMG, Chipotle. They make a freaking burrito and it's a $800 stock. How does that happen? They make a big burrito and it's an $800 stock. But look at that. And actually, I am going to put something else on here. Let's go dividend. The dividend is pretty much the same. Let me go add another parameter. Dividend growth. Take off dividend. Are these companies growing? Well, evidently CMG, they don't pay a dividend. That's why. All right. Let's go to the next one. How about SBAC? Dividend growth moving up. Dividend paid growing up. If they can grow their dividend, they can grow how much they're paying out on their dividend. How about this? Look at the stair-step effect on AMT as far as the dividend. Going up, going up, going up. So that means every quarter, just about, you're getting a bigger dividend. Man, if I could be in a stock that looks like this and they keep growing their dividend, how cool is that? How cool is that? I'm taking off dividend growth. Look at that. This is a higher payday every quarter by way of dividend. And look at you're making money on the stock. So I'm going to move this from the 3 and the 8. Let's put on the 20. Look at that. Still overall, and if you want to give it even more room, let's go put on a 50-day moving average. Oh man, is it really moving that slow? I'm going to put on a 50-day moving average of the stock's price. Gives you even more room. Look at that. Look at that. This is a longer term stock. 50-day moving average exponential might not be so bad. KBH, how about they're growing their dividend as well? All right, a little bit more volatile in the move of KBH, but overall still moving up in price. Whew. EMPH, that's just a stock that we just love. It doesn't pay a dividend though. Doesn't pay a dividend, but look at that stock's graph. Look at that stock's graph. So in a time period where the market is going volatilely crazy, why not play what's hot, which is gold? And if you're a longer term investor and you're looking for stocks to stay in that do well and pay a dividend, I've got 10 good dividend. Well, Enphase doesn't pay a dividend, but 10 good relative safety stocks above the value of 1 with the exception of Enphase. Folks, from a trending perspective, that's what you need. That's what you need. So, Money Making Minute. We talked about what The market did yesterday, big downward move in the market yesterday, but I'm trying to teach you, if nothing else, don't panic. Have your trade set up and go rock and roll, okay? In this time, what do you play? Gold is a hot industry. You may want to consider playing gold. It seems to work whether the market's up or down, all right? Gold is hot. Can you still play it? Yes. Make sure that before you pull the trigger on a gold trade, that the market is moving higher before you execute the trade. If you're a longer-term investor looking for stocks to sit and hold on to, then looking at some of these stocks that are good relative safety stocks is a good way to go. You can make money on the capital appreciation. They are not as susceptible to whipsaws and pullbacks in volatile markets. Number one, and number two, they pay a dividend. Man, that's power. Knowledge is power. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.